Uncensored live Q&A session. My name is Danny and I will give you the webinar today. The first part will be more into the previous questions that our team has prepared. We're going to go through them and try our best to answer them. And the second part will be with the dynamic questions, which are questions that will be received during the webinar live, and I will paste it down here. The third will be just a little bit of information here, slides and links, which is supposed to help you find certain things in the website. Although those things can be accessed via the web trader with no problem, which I'm going to show you in a moment. And that slide over here is supposed to help us assist with the approach to analysis. Nothing too complicated, but just to understand a bit better how to approach it. And that's pretty much it. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. All right, so I want to tell you guys that the webinar is recorded, and you can find a recording in our YouTube channel later on. For any purpose, if you would like to recap, watch it in your own pace, you can just find our YouTube channel, and there you can enjoy all the content of the previous recorded webinars. So now we're going to go through the questions and do our best to answer them in the best way. The first question we have here is how can I calculate my future overnight fee? All right, which is called a swap. So we're going to take the question here and we will paste it in our notepad up here. Okay, I hope that everybody besides Bobby can hear me properly. Okay, guys. And that, of course, as you can see my chart, my screen here. Okay, so the first question is very basic, just how to calculate a future overnight fee, which I'm going to show you. Of course, this interface here is called the web trader. There is really no need to download or install anything, and you can access it via your personal area in the website after logging in with your email and password. So basically, all you have to do to get to here is just to go to avatrade.com, log in with your email and password, and you're here. And if you're not here, you can click on web trader or web trading, and then you get to here. Like I said, it's not necessary to download or anything like that. And it also can be found on the personal device. So this one is the desktop version, right, for the computer, but you can also install it on your phone. All right, so how can we calculate the overnight fee? Okay, so let's pick an instrument for the demonstration. Let's take gold. Just again, it doesn't really matter because what I'm going to show you can be for any other instrument. And okay, so what I did is I basically went through the categories, and under commodities we have metals, and under metals we have gold. And if I click on gold, it opens the chart and I can expand it all the way up just like that. And on the right hand side we have two tabs. The primary tab, which we are at right now, is called order entry, and in this tab we can design a position. To the right we can find the information for the instrument, including lot size, the time that it operates. Underneath we have the spread, leverage, margin, and at the bottom we have the overnight fee. So basically, when I'm opening a position, I have two things that I need to pay attention to. One is the spread, which is the difference between the bid and the ask, and it will be charged as soon as I open the position, and it will be presented as a minus, meaning that my position will not start flat, but it will begin with a tiny minus, which is considered the spread, the difference between the bid and the ask. Now, if I hold the position overnight, if I hold it for more than a day, right, overnight, I hold it after midnight, after 10 p.m. to be exact, that means that I'm going to begin being charged with a swap. So per day, let me just jot it down to be absolutely clear. The swap is calculated yearly, okay, but will appear on my position daily. Okay, so we're gonna write it down. Let's say gold, and for gold, let's go 0.01. Again, we're just learning, so it doesn't really make a difference. So it's 0.01. The current price is 2650 point. Okay, so let's stick with the sell price, and we wish to calculate the swap. So how can we do it? Like I said, swap is being calculated yearly. So when I go to the instrument details and I scroll all the way down, again, I have to scroll all the way to that segment here, which is day charged, week charge, month charge, 3 months, and so on. And at the bottom of the list, we have the year charge, right? Sorry, the year change. This is not what we're looking for. We have the overnight fee. That is what we're looking for. Overnight fee, yearly rate. This is for a buy. And underneath, we have a sell. Okay, this is something else entirely. You guys can ignore that for the time being. We're just going to focus on those two parameters. So the rate for a buy, let's jot down both of them just so we can have it. So 6.33 and then 2.165. And then what we can quickly do is to take the value from our position. Okay, we'll bring it down back to 0.01. And while looking at the value, let's also jot it down, 2650. Of course, the value will match to the exact value of the instrument because we only took 1 unit. And when we are taking 1 unit, the value stays the same. If I would have had, let's say, 10 units, value is multiplied by 10. If I would have 5, then by 5. If I would have 1 lot, then by 100, because 1 lot is 100. Why is that important to know? Because the value determines, the swap is determined from the value. So that means this percentage, let me also simplify that by putting a percentage next to it. And now we know 6.33%, 2.165%. And this is, again, let me remind you, yearly calculated. Means that if the value, let's suppose that it stays the same, 2650, and we would like to calculate what would be my daily swap, as an example. So what we're going to do, since in a year we have 365 days, what we can do is we can divide the value, which, let's bring it down back to where it was. Okay, and then what I'm going to do is I'm simply going to take the value and I will divide it by the swap yearly percentage. Okay, and then I will divide whatever I get. Okay, so let's do it together first. 2650, and then we have to multiply that by the percentage. Okay, so we have 2650 times, let's go for the buy, 6.33%. That means 167 for a year. Okay. And if I will divide this by 365, and I get, just a second, and I get less than $1 a day. Okay, and if I would go for the sell, that would have been times 2.165%. Okay, that is 57,325. And if I will divide this by 365, then I get a little more than 10 cents per day for 1 unit. Yeah. Now, it's important to remember, guys, that the same way that I did this calculation here, just a second, value times yearly swap equals annual, okay, yearly percentage divided by 365 equals daily. All right, so basically what's happening here is we took the value, we took the how much gold worth, right? This is how much it's worth currently, 1 unit. And we multiply the value here by the percentage presented in the platform. And with the value that we've got, so this is, that figure here is 6.33% out of my value. And because this is the result, if I wanted to do this daily, if I would want to know daily, I would have to divide it by 365. Now, assuming my position would have been 10 times higher, like that, naturally my value increases by 10 as well. Naturally, my swap will be increased by 10 as well. Not the percentage, but the actual result that was out of the calculation. Okay, so instead of basing the 633 on this value, we now have to do it on that value, which make this number that number, and so on and so on. And instead of 0.45, it would have been 4.590. Okay. Okay, we got some complaints about the sound. I do hope that the sound works perfectly. On my end, on the software, it does look perfect. So I hope that for everybody else, it's perfect as well. So I hope that it's just for this particular person, and we can proceed. So this is basically how we calculate the swap. Super simple. There is nothing really complicated to it. And you can, like I said, you can rewatch the webinar again in our YouTube channel. Okay, just a moment. I'm just aligning it to make sense to us. So later on, if we will review this, we would know what this is about. Get rid of that and also maybe make it a bit smaller. All right. Second question is, what is the difference between different just a second, what is the difference between different instrument groups? Okay, different instrument groups. I guess that this question is referring to the categories here. Okay, categories. And the question is, let's see again, let's review it again. What is the difference? What is the difference? Maybe different says. Okay, well, we'll try. We'll see. All right, so what is the differences? Well, if we're gonna go through the categories, we can see that the major difference that we can think about is the movements between different groups. So for instance, if I will take one of the indices maybe, and I will take just a second. Let's find something. Maybe let's go with FTSE. Okay, so and I see the value now is 8,344. And I'm now going to compare it with something not from the indices, let's say maybe one of the commodities. Let's take something small. Let's take with crude oil. Okay, and I will apply both with an ATR, and we're going to traditionally change it to 5, and also change the color here. And in here, we're going to do the same. And we immediately see that, just a second, let's get rid of that. We can immediately see that the average movement for oil and the average movement for FTSE is completely different. Right now, I'm talking about the comparison in movements and not percentage to its own value. Of course, if you compare the percentage, you might find some similarity, but again, the numbers on the chart are entirely different. FTSE has tendency to move $163 per, this is days, this is, oh, sorry, let's also change that to days. But still, as we can see, even though this is days and this is days, we can see that oil is moving a little more than $1.3, almost a $1.4. But FTSE, because the value is much bigger, has tendency to move much more now. But this is not a rule. It doesn't mean that every instrument with a bigger value will move more. Okay, it's not, let me give you an example. We're now just talking about the differences and not anything specific. But still, I would just like to show you guys. All right. Yeah, it's a little difficult to see, but as you can see, gold is more than twice in its value than, oh, there is another. Okay, if somebody can reply that the sound is okay, I'd really appreciate it, because there is another complaint about the sound being very low. I hope that the sound is appropriate. I hope that the sound works fine. No sound. Oh, that's a problem. Just a second. Okay, what about now? I hope that it works. Does it work? I hope that the sound works fine now. All right, so let's proceed. As I said, if we're making comparison between two instruments, and as we saw between FTSE to crude oil, there was a big difference between the average movement, because this is an indice. It was an indice with $8,000 value versus crude oil that was small. And then we saw that oil moves a little more than $1 and FTSE is moving much more. However, this second comparison is here to show us that even if the value is bigger than the other instrument, still we can get similar movement. Okay, so it's not a formula, it's not always how it works. But of course, if I'm looking for big movements, and I'm gonna take an instrument with the big value, and I will compare it with an instrument with much smaller value from different categories, let's say even a stock, and let's say even Intel as an example, and I will compare. So I can immediately see that the, this is per day. Yes, it is. Okay, but Intel, it's been very quiet, so let's extend the ATR just a bit. Okay, it doesn't make a lot of difference. As we can see here, Intel is moving much less. Even if I'll take another instrument like Apple, still we can see again per day, it's not even close to what we get with NASDAQ. Okay, and like I said, because the value here is much bigger, we can expect it to move much more than a stock, okay, in an indice, but it doesn't have to be like that. It's just one of the differences. Apart from that, there is also a difference in analysis. When I'm analyzing something like Forex, if I'll take one of the majors, and I'm going to take maybe Euro Pound as an example. So with Euro Pound and Euro USD, if I'll compare them both, and I'll get rid of that for now. Okay. What I can gain from trading two currency pairs versus the euro is that if I do my fundamental analysis and I understand what's happening with the euro, I can't, it's not that I only can analyze this specific pair, but everything that goes against the euro might be a possibility for me. Okay, because when I analyze one pair, and one pair usually can be against another pair, like we're seeing here, which euro stay the primary currency in this case. Then I can, of course, analyze the rest of the things related to pound. Can be the same. As you can see, we have pound versus dollar, Canadian, Swiss franc, and so on. So this is one of the advantages. You can do analysis on one instrument, on one currency pair, and again, look at the others and enjoy the diversified analysis. That also can be useful for stocks, as an example. How can it be useful for stocks? Let's open up the stocks, US stocks. Okay, and let's suppose that I'm gonna go with two instruments that has competition, two stocks. Let's say Facebook is an example, and another social media. Since this is an MT4 account, I guess we're not going to be able to find it in here. Let's say Snapchat as an example. Okay, and if I will compare it with Facebook, this might not be the great comparison ever, since Facebook might be more, maybe Instagram compared to Facebook or TikTok. Okay, so the point is that I can find two stocks that has competition or related or in any other fundamental way, and by analyzing one instrument, I can also assume that the other instrument has news as well. Again, it's not a formula, and as I have explained before, Facebook might have news, Snapchat might not have any news for a while, but it could be related and it's worth checking. Another way for me to find, okay, so I saw that there is another question here about fundamental analysis. So I will show you guys in maybe 2 minutes how to find the in here in the website, how to find information about one of the stocks, and this can also help you find fundamental analysis to do research upon. Okay, actually, let's do it now. I think it's part of this question anyway, so we can wrap this question up and proceed with the solution to the other one. So what is the difference? Showed on the chart. Okay, it's not really something that I can write down. As I've explained, some of the groups can have impact on each other. As we've learned, indices has much bigger values since they are a group of stocks, so they have tendency to move much more than its maybe one stock or a different instrument, right? We've learned that something with a much bigger value. Let's take something else. Okay, so if we're looking at Dow Jones with 45,000 per indice, that can on average move 224, and we're going to compare it now with something else with smaller value, like wheat as an example. We can definitely see that even per day, making this comparison, it's moving more than 30 times, not 30 times, maybe 25 times more than wheat. Okay, and that's understandable because the price per unit for wheat is 552, and the price per indice for Dow Jones is 45,000. Okay, some of the differences that we've learned is to also when we are analyzing one of the currency pairs and we're analyzing another currency pair to go against the primary pair, can also be used for analyzing the other currency pair. So that means that if I'm, like I said, I'm following, let's suppose I'm following the pound this time, and I have pound versus Swiss franc. Just a second. And on that one, we can have another pair, maybe euro versus pound. Okay, so we have pound versus Swiss franc and euro versus pound. And if I did some analysis on the pound, it might be useful for both. Okay, that's another difference. I don't think we should carry on because there are more differences, but there is really no reason to dig too deep into that. We would just rather carry on and show you guys how to do the fundamental part. Okay, so let's take that question. Don't worry, we're going to get to that question as well. But because the last question and the question we're having now are related, I would like it to stay on the topic and give you a solution for both. So this second question is, what is the best way to begin a research for fundamental analysis on a new instrument? That means that right now, as we saw one of the stocks, okay, let's suppose that I want to do some research on a new instrument. Okay. Actually, let's fold it down and let's pretend that we don't know still which instrument we want to analyze. So what we can do, we can go to this globy icon, go to the second tab here, which is called Market Buzz. And in Market Buzz, I'm going to give it a moment. And in Market Buzz, I can find one of the instruments that I want. I was lucky enough to know that Amazon was here. And when I click on the bubble, I have this whole new page, which can show me articles and related subject, which it was mentioned upon. So that means that now I can read specifically for partnership or lawsuit or product demand increase or product release or price target raised. One of them specifically, if I want to focus on the lawsuit as an example, I can click, go to the articles, and it's going to immediately show me what I need. Okay, apart from that, this section can be designed differently. If you want to see instead of bubble, you can have it as a list. But you guys get the point. You have different categories. You have, when you proceed, you get more information in this panel, and you can also filter it by the specific subject that you want. All right. I think this is enough for now. I don't know if this is, by the way, the best way, right? We're not here to tell anyone what's the best way or the worst way. It's one of the ways, and it's accessible via our website. So it's one of the ways that I'm going to recommend you guys. Of course, if you don't like it this way, you can just Google it, or you can find any other source for your information. You don't have to do it through the website. But it's one of the ways, and it's convenient, so why not? So for this, there are various differences between tendency price change, values, analysis types, and basically that's it. Okay, difference in lot size. There are many differences. We're not going to include them all. There is really no reason for that. I just put down the first things that came in mind. In here, we saw that the market buzz, let's maybe put it this way, market buzz feature is accessible via the web trader by clicking on the globe icon to the left, okay, which can help find fundamental analysis, how can I write it down? Based on mentions on articles and can be filtered by subjects and categories. I'm gonna make this a little smaller. And then we have this question here. So this question is, can I use signals without changing the lot size? All right, that's actually not a bad question. We're gonna take it and paste it down here. Okay, let's quickly understand what this question is trying to find out. Okay, so the question is, can I use signals without changing the lot size? Let's first understand what the lot size is and quickly go to the signal section. And in the signal section, we're going to randomly pick one of the instruments. Maybe go with S&P. And then I'm gonna take, okay, so the signal is constructed, just a few words. We're not gonna teach you anything too specific about the signals, just quickly an overview how it's constructed so we can understand the question, how to answer the question. The signal is constructed in a way, if I'll go back to the signal section, that there are two scenarios for every signal, okay? A take profit and a stop loss. There is also a buy and a sell, and it's based on support and resistance. Resistance being edge points higher than the current value. Of course, with a buy type, my intention is that the value will increase. And the stop loss for a buy will be underneath at the support lines, okay? Mostly based on the support lines presented in here in the tiny chart. So the entry price, which was the price that it was based upon, has two pending orders. Take profit, that's supposed to close the position automatically getting to that price, and a stop loss that stops the position automatically when reaching that price. There is the production time when this signal was manufactured, and it wasn't by AvaTrade, it was by the Trading Central. And if I'll click here on View Signal, and I click here to expand the chart, I see that some of the levels here doesn't appear on my chart. Okay, 1 6125. Oh, actually, it's the same validity. Okay, so I've changed it. It was like this before. And if it looks like this before and you don't get to the same levels, you see we don't get the upper resistance, we don't get, oh sorry, and we don't get the lower level 6,047. Why is that? Because this chart is daily and the validity here is daily. So to switch from the current value to daily, what we need to do is to go to the upper left, click here on 1M, scroll down and go to 1D. And now what's presented here, the same validity in here. I can also scroll up and down to customize the chart, and I can click here on the column price to make it bigger or smaller. This way to better customize it to my needs. Okay, and the question here is asking about the lot size when taking a signal. Now, as you can see, if I scroll up and down, there is no advice for the lot size. So if I'll go with one of the scenarios, it doesn't really make a difference. Let's go with the buy, because the lot size is offered by the, this is the default lot size that offered to me by the platform. Okay, whether if I'm with a sell or with a buy, let me just quickly show it to you again. Okay, we were with S&P, right? Let's find it again. Okay, and this time go with a sell scenario. So you guys can see that it's still 0.03. And with 0.03, okay, this time when we are with a sell, we can expect a certain result. So if I'm going to launch it like this, I can expect it to, if it triggers 64, oh sorry, something here doesn't, sorry, if it triggers, because we are with a sell, our take profit needs to be underneath and not above. Okay, because our intention is that the value will decrease. So if we're looking down and we see that the targeted price is something here, again doesn't make sense. Let's go with, we are with the sell, so it needs to be, that makes more sense. And 108, okay, that makes much more sense. Okay, and now we'll paint it in green. It's not mandatory, but it helps to show you guys the area for profit and area for loss. Okay, so again, if I will examine the take profit and stop loss given by the signal, we can see that if it gets to the green line, we can potentially make 63, right, possible profit. And if it goes up to that area, we can lose potentially 33. Now, the given lot size that we had by default will result those potential profit or loss. And if I'm not going to modify, which I don't have to change it, okay? Because the signal doesn't provide me any hint which lot size to take. It's part of risk money management, and I should, in my own way, think about the lot size. Okay, the signals are just instructions. The signals are just instructions for take profit and stop loss for either a buy scenario or a sell scenario. And if I choose to go with one of them, this is what it does. It doesn't determine anything regarding the lot size. So the lot size is flexible, and I can make it 0.01, which will naturally decrease my take profit, or I can make it even higher, and then to increase my potential profit or loss. Okay, I can make it even higher and increase it even more. Okay, there are a couple of things that I should consider when increasing or decreasing the lot size, preparing myself for the impact on my account, positively or negatively. One, I should think about the cost, if it's even possible for me to take this position, and that's by making a quick comparison to the margin impact. Okay, so every instrument has a value. This is the price per indice. Okay, so we have price per unit, which is 6,096.25. Oh, sorry, 96. Okay, and while I'm taking 50 indices, 50 units, okay, so we've got 6,096.25 times 50 equals value of 304,812.5. It's written here, guys. So if you're using MT4, MT5, you can do it on your own with the equation I've jotted down. And if you're using the web trader, you don't even need to do that because that happens automatically, presented here on the value. Okay, but if I would to still confirm and calculate it in my own calculation, so I know that this is the value and this is how much 50 indices of S&P worth. And then we have the leverage. Okay, the leverage is 1 to 20 in this case. Multiplies buying and selling. And because I multiplied by 20, what I can do is I can naturally divide my value by 20, which brings us to 15,240. And the reason is, again, you don't have to do it like me, guys. You don't have to do it manually like that. If you're using the web trader, it's been done automatically. But still, because this is a webinar and I'm showing you guys, I still want you to know. I still want you to know how it's being calculated here behind the scenes. Okay, so this is our margin impact. Margin impact is the true necessary amount for us to open the position, which needs to be available in our account. It's not the value. So in this particular case, we understand that this is not even doable for our account size. Okay, so considering changing the lot size from what we had in the beginning, which was 0.03, yeah, it was 0.03. Then I understand if I will increase it too much, I might not be able to take the position. Okay, oh, I almost forgot to write down here that we can simply divide value by leverage, and then we get the margin impact. Okay, necessary amount to open. Just a second, guys. To open the position. All right, and now I have everything, and we can make a choice out of knowledge. And now if I want to increase, and I will increase it, let's say just by 10. What do you say, guys? Is this a position that I can take, or I don't have enough capital? Of course, without leverage, I'm not even close. I need more than 20 times to take it because I'm multiplied by 20. But since I have a leverage of 20, I can get 20 times less, which gives me the ability to now take the position. However, having the ability to take the position does not mean that this is a wise decision to actualize almost 90% of my margin. Okay, it's also something that you should consider. Having the ability, it's not always about what we can, it's sometimes about what we should. And this is not a scenario that I will always prefer to actualize almost all of my balance, all of my margin. Okay, remember that this needs to be available to open the position. However, I still need to maintain a certain level of margin. So while using a signal, just like we had a minute ago, okay, again, click view signal, then again, go with the sell scenario. And now we see that this is what the platform offers me by default. And now I know that I can increase the lot size, which will naturally increase my potential profit or loss. But I should be careful while I increase, and I have to pay attention to the margin impact. Okay, so I can keep safely sustain the margin level in my account. Okay, hypothetically, if I would want to go like this as an example, and I take 2 positions, which I can, right guys? I have 10,000, 4.5 brings me to 9,009.1406. Let's be accurate about it. Okay, so assuming we're going to take 2 positions like this now, and then we have 9,144. So out of my 10, this is quite considerable percentage. Okay, so having the ability to increase does not mean that we necessarily want to go for it. All right, so to answer this question, we can use the signal without changing the lot size. Okay, changing the lot size can increase or decrease the potential profit or loss. We must pay attention to the margin impact while changing the lot size. To ensure we have the ability in a safe way to open the position. Of course, guys, as I said in the disclosure, what I'm showing with you and sharing with you is only my personal opinion. And if somebody wants to go and take a lot size that will use 99.99% of his margin, it's not forbidden in any way, and you guys can really use it in any way you want. But I'm here also to show you perhaps something a bit more educational, while keeping in mind that this is my opinion and everybody can use it as they want. Okay. All right. Okay. So I believe that we have concluded everything that we were requested to. Yeah, we've answered everything. And now we can move to the part where I can send you those nice links to add yourself even more education content. Like I said, the majority of those can be accessed on the web trader, but still it's good to have the links in case you're using MT4 or MT5 and you just want to do it via the links. So I've sent the first one and I'm sending it over the chat, right? This one is for logging and make a deposit. The third one is for the help center and the FAQ. The fourth is for a real account. If you're still playing around with a demo and you want to get down to business and really practice real trading. And the last one is Academy. And now I'm going to show you guys how to access it from the web trader. Before that, I would like to share with you the special promotion code, the Q&A benefit, for you guys to give to your senior account manager. And this can give you one-on-one premium market review with him, which, to my opinion, this might be the most useful thing that you can help yourself with, just to have a one-on-one personally with an account manager to ask the questions, to experience the charts, maybe even to do some analysis, and so on and so on. So really take the coupon, the code and use it. Apart from that, I want to show you how to quickly get there from inside here. All right. So on the left-hand side, we have some tabs here. In here, I have my personal details. Here is trade, where we are at right now. Well, we are in the signal, okay, but trade will take us to trade. Positions, order, history, signals, news, discovery, additional platforms, and in here, almost all the way down, you see we have the chat here. Almost all the way down, we have the education section. And if I'll click here on the academy, it will take me to the academy. And if I'll click here on tutorials, I get access to all those nice videos, that we have about different topics for you guys to explore. Okay, many things here, really useful, and I recommend you guys to check that out. All right, so guys, for today, I think we've concluded, like I said, everything that we should have had, everything we were requested to. If anyone would like to share with me any questions, anything that wasn't fully understood from what I taught you today, we still have another 4 minutes, and you are welcome. So I'm going to give you guys another 30 seconds to ask whatever you want, and we will try our best to answer the last question. Anybody else would like to add another question? All right, so we have a question from Matthias. What do you think about gold? Well, it's because tomorrow we're having the non-farming payroll. I'd rather not give you my opinion now, but give you my opinion tomorrow. So let's, I think, wait until tomorrow, and then we'll see. We can see that it's quite consolidative. In the past week and a half, it's been ranging through the same levels. In this area, the 20-ish, $25 range, we can see here it couldn't break the support. It got very close 4 days ago, but we'll see. We'll get to the non-farming payroll, which I also recommend you guys to check on the economic calendar. And then tomorrow we'll see. I'm sorry, Matthias, I don't have any opinion about gold to give you now. All right. So guys, it's been a pleasure giving you this webinar today. I hope everybody learned at least one new thing from the webinar. You're all welcome to join us next week. Other than that, I wish you all a fruitful week and have a good day.